I think it's basically probably too early for us to actually talk about the dividend for 2015. As you know, basically the EPF policy has always been to pay out in full all our realized income for any given year. So it will still depend very much on the performance of the third and fourth quarters for this year. I think, as you know, we've already announced our results for the first half of this year, which were pretty decent. But given where the markets have moved since the middle of the year, I think we would be cautious about trying to make any kind of prediction.
Mentioned, we are basically long-term players. We have been investing outside of Malaysia for a while now. At rates when ringgit was much lower, and certainly, it's no secret that with the ringgit weakening, of course, our foreign assets in terms of FX gains have done very well. And if you notice that in our first half year's results, that was clearly shown there that quite a bit of the returns has been on the forex side.
Recently, we brought some of our global partners, people like the other pension funds around the world, to Malaysia, and they're partnering with us to invest in Malaysia. So it works both ways, basically. While we network with basically our counterparties on a global basis to look for investments, they're also working with us to co-invest with us in Malaysia as well. So there will be things that are coming up. I think certainly, as we do it, we will announce those to the market. And hopefully you will see what we're doing in respect to some of these investments. I always preferred assets or investments which give us good visibility on cash flows, right? Because given the nature of the fund, right, we're always looking out for assets which provide us the ability to have that long-term realized return, as well as obviously to constantly be able to provide the cash flow for our members.
Our asset allocation is quite conservative. We have about 51% is anchored in fixed income, largely all investment grade bonds and government sovereign bonds and so forth. And we have something like close to 40% in equities, including private equity, which is actually very small. Private equity is only about 2%. And we have close to about 8% in other alternatives, basically real estate, domestic as well as foreign.
First of all, I think we're still very new in the space. If you look, as by our chairman's speech, we really started being active in the market, around 2008, 2009. So at this point of time, basically the focus will be on two areas. One, building our capabilities, especially on the Asian private equity space, and just investing in funds at this point of time, mainly, number one. Number two is slowly building our expertise in the developed market through investing in private equity funds directly. And maybe the third point I would say is that we are cautiously looking at getting into co-investment with our other private equity fund managers. So, for example, way back in 2-3 years down the road, we did the privatization of QSR, the main operator of KFC as well as Pizza Hut. So we're taking small steps at this point of time, just building the capabilities internally.